This is a comment and a question. So I'm going to read out the comment and I will answer the question. So the comment is, there's a great trader that I follow that trades in a very similar style to you. And he refers to location and event all the time. Do you know what those mean? And if so, can you explain them? First of all, I want to say your trader friend sounds like a genius. And second of all, yes, I know what location and event is, and I will explain those. Now, location and event, those are a couple of terms that are very important. Now, we don't generally use those words location and event with Ultra Blue, but we do refer to them in different ways. We're talking about overextended markets. We're talking about sweet spots. We're talking about the different places that we could be looking for trades or where we don't want to be looking for trades. These would be locations. We're looking at events as simply a signal. We're looking for a reason to get into a trade. What is the event that is going to get me into a trade? Now, for us, we have lots of different ways that an event would happen. We have a fusion trade event. We have a elimination trade event. We have a zone trade event. We have these different events that are going to generate a signal. Now, when you have an event, they need to happen in the right location. So what I'm going to do is demonstrate location and why it matters. And we'll take a look at that plus some events. So what we're going to do is break this down. We're going to look at this as one moving average. If I have a couple of different moving averages, this is going to get maybe a little bit too detailed. We can get into that afterwards. But what we're going to do is start with just one moving average. Now, when we have a moving average, we have a great idea where the price is, where the price needs to go, where the price has to be in order for us to look for a trade, in order for us to not look for a trade. There's going to be situations where we need a pullback. There's going to be situations where we need the market to return before we look for a trade. And that is giving us the location. We need the price to be in the right location. So if we take a look at the price versus this 50 EMA, what we're looking at is a price that gets away from the 50 and then it gets in closer to the 50 and then it gets away and it gets in closer. So we're looking at the price from its location. We want to see, is it located in a place where we could be looking for a trade? Now let's just go right to the current time. Okay, this is really bad. So we're going to look at where we were. So we're looking at the price getting away from the moving average. Now this is a bad location. We don't want to be looking for a trade in an area where the price is away from this moving average. We're looking at bad location in here. We're looking at a bad location in here, but we're looking at a great location right here. The market is located in a place that will justify trading an event. When the price gets to this 50 EMA, or whatever the moving averages are that you use, we can also put on the 13 SMA. That would also give us locations and events. But right now, let's take a look at this 50 EMA. So we've got the price pulling back into this 50 EMA. This becomes a good location for a trade, a good location to be looking for an event. Now, in this case, our event would be an elimination trade. So we've got this pullback candle. It actually touches that 50. Now the price doesn't have to touch the 50. The 50 is a little bit slower and it does pull away from the price a little bit, but we get this beautiful instance here where the price touches that 50 and we'd be looking for an event. And in this case, the event is going to be a move past the high of this pullback candle. So what we'd be doing is be placing an entry order just above the high of that candle. We'd be looking for our stop just below that candle. And the event that gets us into the trade is simply going to be a market that moves above that high and triggers that long trade. So we have an event at a location that justifies that event. Now, if we have a similar event, let's say we're looking at this one here. We've got that pullback candle in here. The price is far away from that 50. Now, the fact that we get above this high, that's also an event. That's an elimination event, but the location does not justify taking this particular trade. What happens is we get a bit of a pullback, a little bit of a sideways market that gets in closer to that 50, and we're in a better location. Now, we're not in the greatest location for a trade, but we're in a better location. Down here, we are in a good location to look for an event. we're in a good place to look for a signal. We get the signal on this bullish candle here, and then the price moves up. Now here we've moved up and we're starting to get a little bit overextended. Now there's an event right in here as well, but the location does not justify the event. I won't be looking at the event as an entry because of the location. We get a bit of a pullback in here. Now the location becomes a little better. This is not ideal, but it's better than several candles before. So we get this better location, this better positioning. Now an event could be anywhere in here. We could be looking at a market that moves above this gray candle. We could be looking at a market that moves above this high. Let's say we're looking at a market to break this high. So we get this little bit of a pause. We get this sideways market movement, and that becomes a nice area to be looking for this event. So we're going to place an order just above that high. We see that it pulls down. We get this swing low. And then the event is going to be this candle breaking above that high. That's going to get us into the trade. Now, again, this market is continuing to move. The location becomes bad. This is not a good location anymore because of the distance from this 50 EMA. Market does pull back. Now we get a really nice location in here. We could start looking for an event or a signal to get us into a trade. So let's add the 13 SMA back onto the chart. So we've got this 13 SMA. Now we're looking at events and locations a little bit differently. They're still going to be the same sort of thing. We're going to get a little bit more frequent signals. When we were looking at this before, we were seeing that this location wasn't ideal. It was not bad, but it wasn't ideal. When we are looking at it now, we've got this 13 SMA. The price comes back to that 13 SMA. Now with the price compared to the 13 SMA, we're seeing this now becomes a better location to look for an event. This becomes a better place for the price to take off. We're looking for a signal at this point. Again, in this case here, because we've added the 13 SMA, now we're going to look at a different kind of event. I don't particularly like to take a trade while the price is in between these moving averages. So if I'm looking at this in here, my event is going to change. I am not going to be looking at the break of the high of this pullback candle, this elimination trade. Instead, my event now becomes a close outside of the zone. The space between the 13 SMA and the 50 EMA, this becomes the zone. We've closed into the zone. We've got this nice pullback, and then we've got the candle closing outside of the zone in that trending direction. This is the event that I'm looking for. This is the signal. This is a zone trade. So we have the price closing outside of that zone, giving us the event that we need in order to be taking a trade. So let's take a look at an event and a location. This is the exact same thing. Right here, we've got this market moving away, putting us in a really bad location for any kind of trades. So even if we do get a continuation like this, we simply don't want to take it, because even though we get an event, the location does not justify it. It does not warrant acting on that event. However, we get a pullback. Now, this location is much better. And at this point, we get a couple of different opportunities in here. We get this one candle closing above that 13 SMA. It's a zone trade once again. And now we have an event that'll get us into a trade. We're looking at the zone trade. We get a little bit of a pullback in here, so we could be looking at an elimination trade. We've got a couple of different things that'll get us into the trade, but that is the event at a good location. Again, I was going to scroll over here and look for something short. Now, again, what we're looking at is where is the price and are we looking for an event in that location? So in this case, we get the market moving away from the moving averages. Now, we have not moved really far away yet. We haven't overextended ourselves yet. We get this pullback into that 13 SMA. We have now a setup for an event that'll get us into a trade. And with this is a pullback candle in a downtrend. So what I'd be looking to do is place a trade underneath the low of that pullback candle. The stop's going to go above the high. And then we're looking for an event at that location that'll get us into the trade. So what we have is a move that drops below the low of that pullback candle, and then we're in that short trade. Now, as this price continues, I could do the same thing down here. I could be looking for the market to drop below this low. This is a pullback candle. If you have a downtrend, you've got trending candles and you've got pullback candles. In a downtrend, these gray candles are the trending candles, and the white candles or the bullish candles will be the pullback candles. Now I get this first candle here. I could be looking to go short underneath this candle. Now, would I do that? I would not do that. Even though I'm looking for an event, the location does not warrant me looking for that event. We are overextended. We are far away from these averages. We need that pullback. We need the price to come back into those averages at this point. When we progress the chart a little bit, we see that the market does get into the zone. So now the location becomes really nice. We've got a good location that would justify taking a trade based off an event. Again, this is a zone trade, and I'm not hugely fond of taking trades inside the zone, but you could. There's nothing wrong with that. So we've got a couple of trades. We've got one opportunity here. This is the first. So we've got this white candle right here in the middle. This gets to that 13 SMA. My short trade would be placed like this. Now, it wouldn't be a trade yet, but it would be an entry. So I'd have this short entry underneath this candle. This is a pullback candle, and we could even start with this one here. This would be also probably the first location that I could be looking for an event. So this candle gets to that 13 SMA, but again, it doesn't have to touch it. Just got to get close to it. We need just a nicer location. We'd set up an entry order underneath that candle. That does not get triggered. And so the next one happens. This next candle is a little bit higher and it continues to move up. We still have this pullback candle. So I'm going to place an entry order underneath that candle. That does not get triggered. And then we get this next pullback candle, and it continues to move up. Now remember, the trend is down. So these pullbacks generally are going to be much smaller, and it's going to lead into a bigger market movement in the trending direction. So we've got this pullback candle. Once again, we could have the entry order underneath the low of that candle. And what we get right here is the event that we're looking for. We're looking for that signal. We're looking for that entry. At this point, we get that trigger. The price drops below the low of this candle, triggering that short trade. Now, the second event that happens is this candle right here. We have a close outside of the zone. This becomes a zone trade. So if I'm going short here, I'd be looking for a couple of different ways you could place your stop. If you have the one candle stop or the swing high stop, so this would be the swing high, this would be the one candle stop. So we've got the stop loss above the high of that setup candle. The event gets us into the trade as this next candle breaks below. But what I'm looking at is simply the price versus these moving averages. Are they in a good place to be looking for a trade? Are they in a bad place to be looking for a trade? Now, with the two moving averages, I had alluded to this a little bit earlier. What I'm looking at is the little more complexity when it comes to events and locations when you have two different moving averages like this. And we'll cover that right now. We'll take a look at this market that has moved up. And with that move up, this 13 SMA is going with it. Now, what's happening is we're getting this separation between the 13 and the 50. Even though the price comes back to that 13 SMA, this is still not an ideal location. We've got this big separation between these moving averages. What I'm looking for now is a pullback a little bit closer. I want to close that separation a little bit. I want these moving averages to start coming together. And the way that's going to happen is by the price retracing somewhat. So once we get the price retracing and we start getting this moving average squeeze in here, right now in this area, I would say we are in a nice location. Now, we don't get a trade out of this. It does not move up. But if we did get a close above this 13 SMA at this point, we'd be experiencing an event at a nice location. So we've got this pullback that I would consider to be a great pullback. And there's a few different ways we could check this. We've got these moving averages coming together. So we've got that moving average squeeze going on. If I take my Fibonacci tool and I go from the low to the high, we can see that in this area, we are inside that green Fibonacci window. That is a really nice turning point for pullbacks. So you get a pullback, gets into this window, and then it will continue to move up. Now this, for me, makes this a really nice location to be looking for a trade. So this is essentially what we're talking about when we talk about location and events. We're looking for, is the market in a good place to take a trade? Is the market in a not so good place, but okay place to take a trade? Is the market in a bad place? Now, with that sort of middle location, this could be an example of that. We get the beautiful location right here. We've got what we call is a sweet spot. So we've got the price touching that 13 SMA. It's got to that sweet spot. It's got to that nice area where we're going to see the price potentially bounce. Now the price moves away. So we get that bounce. We get that market movement. Now the price makes a small retrace, but it hasn't really moved too far away from these averages yet. We don't have the kind of gap that we see in here or we see in here. So we get this area in here that is still not a bad place. We could still be looking to go long in this area because the location isn't terrible yet. We don't have a overextended market. We don't have a market that has moved too far away. We don't have these moving averages super separated. We've got this location that is not bad. Now, if we end up moving any further, what we're seeing is the price is moving away from these moving averages. The location does not become ideal anymore until we get a pullback into these moving averages. We get this moving average squeeze. And in here, we've got a beautiful location for a trade that is going to be triggered by some kind of event. All right, so I hope that clears up the difference, or the lingo anyways, between an event and a location.